Hi, everybody. Welcome to the latest version of The Break with PIA. I am Brad Lachut, the Director of Government Affairs for PI Northeast. This is my colleague, Claire.
Hi, everyone. I'm Clare Irvine. I'm the Government Affairs Counsel for PI Northeast.
Today, we are going to be talking about the Paycheck Protection Program loan program that businesses can apply to get some payroll assistance from the government. Claire is going to be doing a deep dive on this issue. We've been getting a lot of questions. It's been a very hot topic in the past day or so. So this is obviously a very important topic for a lot of our members and a lot of clients as well. So a lot of good information to come. Claire, take it away.
Yes, so the Paycheck Protection Program, I'm sure you've all heard of, is the loan forgiveness loan program where the government will forgive a loan if you use it primarily for payroll purposes. So the whole purpose is to help people help businesses keep people employed and for fewer people to be filing for unemployment. So we're just going to dive straight into what the loan does. If you want more of the background, we did a video on the federal stimulus package that included this program earlier in the week. So check that out. So we're just going to cover the essential details, including the who, the where, the what, the how, all of it. So we're just going to straight into eligibility. The main businesses eligible are those with fewer than 500 employees or businesses that would otherwise meet the SBA standards. However, there is a huge inclusion for this program that is really broad into who can apply, and that is the inclusion of individuals operating as sole proprietors and individuals operating as independent contractors, as well as self-employed individuals who regularly carries on a trade or business. So that means it's not just the typical business with 10 or 20 employees that we would think about. It also includes individuals who are independent contractors who might not be getting business at the moment because most businesses are shut down. There's also veterans organizations, tribal business concerns, and 501c3 nonprofits with fewer than 500 employees. There are some special eligibility rules as well to expand the program. It includes the in combination food services are covered if they have 500 or fewer than 500 employees per physical location. For a business such as an insurance agency, it's 500 employees across all of your locations. So it kind of expands the hotels or restaurants that can qualify if they're in the specific sector. It also applies for franchises because a lot of major corporations, the location you go to is actually a franchise, and recognizing that those are operating more as a small business with kind of, for PR benefits, a big company, but not on terms of closures at the moment. And there is an exclusion for venture-backed startups if they are kind of controlled by the venture capitalists. So that's something that is kind of the National Association for Venture-Backed Capital companies has been trying to advocate for, and there's guidance for, if you're a startup, how to kind of prove that you're not being controlled by a venture capitalist for the sake of these loans. The main requirement for businesses in terms of being operational is that they have to have been operational on February 15, 2020. That is the date this covered period starts, and kind of the date where the COVID-19 started to become a bigger issue in the United States. So as long as the business was operational by February 15th, 2020, even if it started on January 15th, it's eligible for this loan. So the big question for these loans is, where do you apply? And that is the SBA, or Small Business Administration, is using approved Section 7A lenders. So that includes many financial institutions, big and small, and includes credit unions and farm credit system institutions. That also leaves room for other approved lenders to enroll in the program as long as they're federally regulated. The best way to find a lender is to just call your local bank, call your local credit union, other financial institution, and figure out if they will be participating in the program. And if they are already participating as an SBA lender, they should at this point know whether they will be participating, at least starting tomorrow. So they should be able to give you answers and more guidance on that specific detail. In the event that you call a couple of places and they aren't participating and you need further help, the best resource is to go to the SBA regional offices and contact them about lenders in your area. We'll be including a link to that below this video. So if you need to go beyond just calling your local financial institution, that's the best way to go. There's not a set list on the SBA website. And they have over 1,800 lenders, so there's probably one in your area. Now the big question is, when can I apply for the loan? For small businesses and sole proprietorships, that's April 3rd. So Friday, it's a week after this bill passed. It's an incredible amount of time to start up this big of a program. Independent contractors and the self-employed will have to wait until April 10th. That's a week from the following Friday. Only existing SBA lenders will be able to give loans on these dates, so no new enrolled lenders. However, regulated lenders will be able to make the loans as soon as they are approved. So if you contact your local financial institution or credit union, find out they're an approved SBA lender, they should be able to start making these loans April 3rd or April 10th for qualifying businesses or individuals. And so real quick, they have posted the application for this program, and we're going to take a look at it. It's from the US Treasury Department, and it's 4 pages, half of which is mostly information and federal disclosures. So it's fairly straightforward to make it as easy as possible for businesses to apply. You need standard information, and the main one is knowing average monthly payroll, and then times that by 2.5. And that's the loan amount, and then the number of jobs. You also have to certify what you're going to spend the loan on and answer some questions. This is also going to be linked below, so you can take a closer look at it, and most importantly, prepare this information before you apply for the loan. So we're going to switch back to the PowerPoint, to the presentation, to kind of go into more of these details. So first, as I said, the loans, it's calculated on your average monthly payroll times 2.5. So it's two and a half months of your monthly payroll, up to $10 million of borrower. So that is top of the application. To calculate your average monthly payroll, it's looking back at the previous year. So you're looking at 2019 documents. However, not all employers are the same. Some employers might have fairly standard payroll across the years. Seasonal employers most likely do not. So they'll be able to use a 12-week period beginning either February 15th or March 1st, 2019, and ending June 30th. And that's decided by the borrower. So they can kind of play around based to represent kind of what they were expecting to employ, the number of people they were expecting to employ that same period in 2020. And as I said, a business that started in January 2020 is also eligible. Since they don't have 2019 payroll information, they will just use the average total monthly payroll cost for January and February 2020. And so we're talking about a lot about using payroll costs to calculate the loan, and they specify what is included in those costs. It's the typical salary, wage, commission, or similar compensations. The commission point is probably very important for insurance agencies. It also includes the payment of cash tip or equivalent, and that's big for the restaurant industry that's been hit really hard by the COVID-19 closures. It also includes payment for vacation, parental, family, medical, or sick leave under the normal policies. So if you're an employer who normally gives your employees vacation time, that's included as payroll cost. It allows for dismissal or separation costs, payment required for the provision of group healthcare benefits. So that means all the payments you make to cover for your employees' health insurance counts as a payroll cost. Payment of retirement benefits, as well as the state or local tax assessed on the compensation. However, that's limited to the state and local tax, not the payroll tax. For sole proprietors, independent contractors, and self-employed individuals, it's just the sum of the payments of any compensation or income that's the same as wage, commission, income, net earnings, similar compensation. It just cannot exceed $100,000 prorated for the covered period. So prorated, it ends up being about $8,333 a month is the cap on how much you can calculate. And that's true for the payroll cost for an employer. The compensation or payroll for each individual employee is capped at the prorated amount for $100,000. So on the monthly, it's a little over it's about $8,300. Also excluded are payroll taxes, railroad retirement taxes, and income taxes. So that's the income taxes owed to the IRS. Any income taxes paid to such entities such as New York State or Connecticut or New Jersey is included as a payroll cost. It's just the federal tax that's excluded. Also excluded is any compensation of an employee whose principal place of residence is outside the United States, and qualified Families First Coronavirus Response Act paid medical and family leave wages, for which credit's allowed. So while those are excluded as a payroll cost under this loan program, you are able to recoup all of that cost through a payroll tax benefit. So you might be paying those payments out of pocket up front, but we'll recoup it dollar for dollar. There's also, businesses can also use the loan for certain other eligible expenses. That includes interest on a mortgage obligation incurred in the ordinary course of business, rent on a leasing agreement, payment for utilities, which includes electricity and internet, as well as additional wages paid to tipped employees. Again, a lot of employees hit hard by this, receive most of their income via tips. So this loan allows for employers to pay them extra as a result to try and make up the difference. So when you're applying for this at your local financial institution, you will need to have documents to verify certain facts. The U.S. Treasury Department is requiring lenders to verify that borrowers were in operation on February 15th, 2020. The borrower had employees for whom the borrower paid salaries and payroll taxes, and the dollar amount of the average monthly payroll cost. So it's very important to have documents proving those things ready, particularly consistent with every filing with the IRS. And chances are you should have those easily accessible, or can call your accountant or whoever handles those issues for you and get those documents fairly easily. Borrowers are required to make certain certifications, including that the current economic uncertainty makes the loan request necessary to support ongoing operations. This likely covers the vast majority of businesses. There's probably a select few that aren't facing economic uncertainty during these times. But you still have to make a good faith certification that you require the loan to maintain operations. You also have to certify that the funds will be used primarily to retain workers and maintain payroll, and only be used for authorized purposes. The purpose of this program is to try and keep people employed. So it's really important that the borrower certify that is the purpose that is why they're seeking the loan. The borrower will also have to have documentation verifying the employment numbers, and that they has not and will not receive another loan under this program, the Paycheck Protection Program. So once you apply for a loan under this program, you can't go to another institution to apply and see if they can do it faster. Once you pick your institution, that's the one you should stick with your application. You should stick with when applying for the program. And as I said at the beginning, this is a loan, but it's expected that the loan should be forgiven for most employers if you can maintain your current payroll at current wages. The big key, though, is that to try to include restriction, the Treasury is saying that at least 75% of the loan must go to payroll expenses, and no more than 25% can go to other expenses such as lease or utilities. The loan may still be forgiven. In order for it to be forgiven, the employer has to maintain current numbers of employees or rehire employees by June 30th. They also, they can't reduce wages greater than 25%, and any reduction beyond that has to be revoked so that employees are back to their previous payroll, or no more than 25% reduction to employees by the end of June. If the employer takes out the loan and is still unable to maintain their current payroll amounts, then the amount they have to decrease everyone's wages, then the amount of the loan that will be forgiven will be reduced. what percentages, what portion will be forgiven will then just decrease on a sliding scale based on a calculation involving either the number of employees retained or the amount that the salaries were reduced. It's a 2-year loan, so any balance of the loan that needs to be repaid you'll have 2 years to do so. All the loans still carry interest rate. It's an interest rate of 0.5%. While the loan might be forgiven, the interest rate will not be. So it's effectively instead of requiring borrowers to pay a fee up front, it's asking for a fee on the back end of 0.5% of the interest rate. And the borrowers will not be required to pay it for at least 6 months. So all those payments can be deferred. And just additional information is that there's no application fee to apply for this program. The federal government will be guaranteeing all these loans. There's no personal guarantee for business owners. And the borrower will not be asked to put up collateral. So there's no upfront the borrower is not being asked to put skin in the game in terms of like putting their business up for collateral. It's just the borrower seeking funds to maintain payroll during these really uncertain times while the world is effectively addressing a public health crisis. So it's the government trying to just help businesses out in any way they can. And one question we've been getting at PIA as an association for insurance agencies is how insurance premiums factor into this. Employee health insurance premiums do qualify as a payroll expense because the government also wants people to maintain their health insurance. However, the commercial insurance premiums, such as their general liability premium, is excluded. However, that doesn't mean that the policy will be canceled, as states, specifically New York and Connecticut this week have actually issued orders that protect policyholders from cancellation of insurance for non-payment of premium due to COVID-19 related financial loss of revenue. So while they can't use the loan for that, there is other options to try and protect policyholders from cancellation due to the financial stress COVID-19 is causing on most businesses. The SBA also has other programs, particularly the disaster relief loan that has been available for a number of weeks for many small businesses. They do have limitations on how much a business can get from the Paycheck Protection Program and disaster relief loans, but having obtained a disaster relief loan doesn't mean a borrower cannot apply for a paycheck protection loan. Instead, the borrower should just work with the lender to consolidate the loans, and the SBA is eager to work with businesses to do so. So if you have taken out an SBA disaster relief loan, you probably already know that your closest your SBA borrower, because the institution that issued that loan will likely be also participating in this program. And you should call them and work with them to consolidate. And if you have any further questions on this issue, we're about to kind of have a discussion about a couple other things. There's links to additional resources below the video, including the ones I've stated. And you're welcome to send myself or Brad an email or email the PIA Resource Center at any time with any questions or issues you're having. You should also talk to your local lender or SBA lender, because they will know more about the financial side, whereas we're the lawyers who know about the kind of government and the regulations of the program. So that I think Brad has a couple questions on this issue.
Yes, no, so this is the point of the break that we are going to get nerdy. So again, I will give everybody a chance to stop watching if they want to, but I encourage you to keep watching to experience our nerdiness. So I have one big question, one that has come across, I think, both of our desks in the past day or so, is the fund that's been set up to provide these loans is about $350 billion. So pretty big pot of money. However, most businesses have been impacted by COVID, so they probably would qualify for a loan. In addition, it seems like it's pretty easy to apply, right? There's a lot of institutions that are administering these loans, and the application process is not overly onerous. So is there a chance that they're going to run out of money and you should go get your money right now?
I mean, the time is of the essence for this type of program. They're not going to run out of, I don't expect them to run out of money as quickly as some of these state programs have related to bridge loans, but it is still limited to about $350 billion, which, while the amount of the GDP of a fairly economically sound state like such as Arizona, is still limited The one thing I will note is that the Secretary of the Treasury, Stephen Mnuchin, has noted that if it's not sufficient, they will take steps to try to obtain further funding for programs such as this and other ways to support small businesses. So the Treasury is still, if you have issues with applying for a loan and they start running out of money, I'm sure there will be a lot of advocacy, including from PIA, to try to further fund these programs.
So a sense of urgency, but not panic, maybe is the best way to say it, right?
Yes. I mean, the reason we're making this video on April 2nd, we've been putting out a lot of documentation leading up to April 3rd, is to try to help people prepare. But I think the urgency is probably more on businesses just trying to make sure they have funds to get through the next couple of months.
Right, absolutely.
Don't fear, time is of the essence, but it's not the time to panic yet. There's a lot of other things to panic about as well. There's already so much to panic about. They try to make this as straightforward as possible so that to try and focus on supporting small businesses, not causing greater panic.
Well, thank you, Claire. I think this was really, really informative for all of our members and hopefully for their clients as well, because again, this is, I know, a big issue for many people. At this point, I would encourage everybody who is watching this to watch previous versions of The Break, where we broke down issues like the stimulus package and business interruption insurance coverage, and paid family medical leave, paid sick leave, all very important subjects right now as we're dealing with COVID-19. In addition, please watch for further editions of The Break when we're going to tackle other topics that come up just like this. So that I will say thank you, Claire, for preparing this. Go ahead, Claire, sorry.
I was also going to say PI has been posting resources on many topics, including the ones Brad just said, on our coronavirus webpage and resource center. So you can find, if you have questions about those topics, go there. I'm sure we'll have resources on them.
Absolutely. And if there's anything you're looking for, please let us know. Email Claire. Maybe email me if you want to, but mostly Claire. In our resource center, we're here for our members and for their clients, and so let us know what you need, and we'll hopefully be able to provide it for you. With that, I'll say thank you, everybody, for watching. Hopefully this was informative, and we will talk to you very soon. Thank you, Claire.
Thanks.